Good morning, ladies and gentlemen. Welcome to IGE Forum. Today, I'm so very happy to have a distinguished guest speaker, Dr. Charles Dallara, who doesn't really need much introduction, but he's a true global leader with exceptional credentials in public policy and private business in the field of international finance. I'm confident that he will share with us his insightful perspectives on how we should navigate the current multiple crises. Dr. Dallara is perhaps best known as president of International Institute of International Finance, IIF, for 20 years, over 20 years, as I understand, until year 2013. Previously, he was managing director at JP Morgan, after working as head of JP Morgan's investment and commercial banking business. Prior to his private sector position, he held various senior government posts, including Assistant Secretary of the US Treasury and the senior advisor to the Treasury Secretary, as well as US Executive Director of the IMF. Mr. Dallara is currently an advisory partner of Patterners Group, one of the leading private equity group in the world, and chairman of Patterners Group Board of Directors in the United States. He holds a PhD from Fletcher School of Law and Diplomacy at Tufts University. Now, without further ado, I would like to welcome Mr. Dallara. Charles, it's great to see you again today. Thank you for joining us in person today at our IGE Forum. Now, this is the first occasion where I invite guest speaker to my office for our live televised streaming service to our members and audience. So it's a very special occasion.
Well,
indeed.
Kwang-woo, let me say what a pleasure it is to see you again.
Okay.
A pleasure to be back in Korea, and a real honor to be your first guest here at the Institute for Global Economics in this format. I've seen the development and growth of the Institute as an extremely important and influential platform for discussion of financial market issues, of global economic issues here in Korea. And I've been fortunate and privileged to participate in the past. And I'm really delighted to be back to see you again and to see the leadership you're providing, but also to have this opportunity to exchange views with you in front of many of your supporters.
Okay, thank you very much for your kind words. And why don't we get started with your opening remarks or statement?
Certainly, Kwang-woo. Well, let me begin by saying that it's good to see Korea opening up again, although I would like to just take a brief moment to express my condolences over the recent tragedy which occurred here in Itaewon. I have a special affection, perhaps, and affinity for Korea. My daughter, who's now 38 years old, was born here.
Oh, is that right?
And so I followed that tragedy with great sadness. You know, we meet today, Kwang-woo, at a particularly challenging time in the global economy. It's been clear for years that the global economic outlook is not just a function of economic policies and underlying economic trends and investments, but it has an increasing geopolitical dimension to it. And I think we find ourselves now at a critical juncture. The war in Ukraine, launched by Russia, has cast a major cloud over the outlook for the global economy this year and next, and perhaps even beyond. I spend a good bit of my time in Europe, and I have seen firsthand the severe consequences in the energy markets in Europe of this war. The pressures that many citizens and many companies are under as a result of the disruptions of energy supplies are clearly having a major consequential effect in Europe, but not just in Europe, in Asia, in countries here in Asia like your own, heavily dependent on foreign sources of energy. We also have the consequences of the war to deal with respect to food supplies and other critical commodities, which are important not just for the advanced economies, but important for the entire world. At the same time, we're dealing with the efforts to emerge from this very difficult period of grappling with COVID. And I'm pleased to see that Korea, which I think was among the most effective countries in the world in managing COVID, is emerging now with a new sense of energy and I hope as well a new sense of confidence. In addition to these challenges, however, we're now facing the challenge of inflation. And to be quite honest with you, I never thought that I would see again in my own country inflationary numbers that are pushing up close to 10%. Yeah. But we have seen that, and it is affecting the entire world economic outlook. As all of you know, our central bank, I think beginning to adjust its policies a bit too late, is now anxious to rebuild credibility and restore a more normal atmosphere in the financial markets through its policy of raising interest rates. But this has severe knockoff consequences for the rest of the world, and we should talk about that a bit more today. The final point I would just make, though, in my opening remarks is to say how important it is for economies like Korea to continue to innovate, continue to move up the technological chain of progress in order to position this economy for strong growth for the decades ahead. I think Korea has tremendous potential as you position this economy in the midst of this complicated world economy. And it will not be easy given Korea's location here where you are in the world. But I'm confident Korea will be able to face and overcome the challenges.
Okay, thank you, Charles, for your thought-provoking opening statement. What I would like to do for the rest of our time until 11 a.m. Just to follow sort of a fireside chat format. We'll have a conversation on key issues that we face in coping with this so-called multiple crises around the world. Now, you started with the geopolitical sort of challenges, describing this Russia's invasion in Ukraine and its aftermath, the impact on inflation and so forth. Now, before we pushing this further, I would like to ask you about what the likely impact of U.S. midterm election that will come. That's the most recent development, which could have potentially a big impact on U.S. Foreign policy, economic policy, and the relationship with the global superpowers like China and so forth. So what do you expect from this, the outcome of midterm election? Of course, is unlike much expected red wave by Republicans, didn't really materialize, but still it looks like House majority will be taken by Republicans. So it's kind of sort of mixed results on the part of two parties. But the Senate in the Democrats' hands. So partly victory for Biden, Joe Biden, which may mean that his policy agenda may have more sort of support to push forward, or there could be some different views about losing this Congress majority position. So all in all, what sort of impact, if any, on foreign policy and economic strategy?
Well, Kwang-woo, you touched upon something obviously very important for not just for Americans, but for all of us, because of America's strategically important role in the world. First, let me say that as a Republican, I was disappointed by the outcome. But as an American, which is much more important, I was rather encouraged by the outcome of this election. And I'll come to the policy consequences in a moment. Why is that? Because I think Americans have spoken that they're not interested in rerunning the last presidential election. They are not interested in contesting the outcome of that election, that they want to look forward. Clearly, we have a somewhat divided country, and you saw the competitiveness in these races, but in many ways, this is the healthy expression of a vibrant democracy. And so the close competition between the two parties does not trouble me at all. I think that now both parties perhaps will be looking ahead to the next even more important presidential elections. But of course, as you mentioned, President Biden did better than expected as the leader of the Democratic Party. And I think this has given him a little wind at his back. My impression is that he went to Bali for this very crucial meeting with President Xi with a little bit more confidence. And I think that's good for America and good for the world. At the same time, when it comes to pushing initiatives through both houses of Congress, it looks highly likely, even though it's still, as we sit here today, a bit still uncertain, but highly likely that the Republicans will control the House. And I think that the president will have to take this into account in some of his policy initiatives, both on the economic front, on the social front, and internationally. I think that we're at a stage where it's crucial to try to calm the waters a bit in the U.S.-Chinese relationship. There has been so much tension, and to be quite honest, Kwang-woo, so much hostility in public sparring, in verbal fisticuffs, as we might say. There's been so much tension that I think this needs to be eased. It will not resolve the fundamental differences that exist between the two countries, but I do believe that initiating a dialogue here, and I'm encouraged to see that the Secretary of State is going to Beijing to follow up on some of these discussions, because we have a lot of global issues where the US and China can and should try to work together, even while our differences remain very, very visible. That is probably the most important development. And I think that the election gave a little more strength to Biden coming into these discussions. If you look at the war in Ukraine, however, Biden has been very strongly supportive, as you know, as has Europe and many other countries, including South Korea here, in supporting Ukraine during this horrific invasion by Russia. The move may be, however, as this new Congress settles into Washington, that it will be important for efforts to move ahead, to find a pathway to a ceasefire and peace.
Right.
I know that our Ukrainian friends are not particularly anxious to do that as long as Putin is still leading Russia and as long as they are winning on the battlefield. But I think it will be very important for the US to work with its allies and actually, on this issue, even develop a dialogue with China about how to bring this war to an end. To me, this is one of the most pressing issues geopolitically, economically, and financially on the global landscape for 2023.
Yeah, okay, well, that's good. Point, actually, like yourself, I was also very much encouraged by the development at G20 meetings, summit in Bali. Even though the G20 meeting is not meant to produce a very tangible outcome that will change the global environment overnight, but still, I think the first face-to-face meeting between Biden and Xi, it's the first time in 3 years or something like that, gave much hope, even though with caution. I think this is a good development. I think this, it's not easy to achieve a sort of competitive environment without confrontation, but I think this is something that we should strive for.
For sure.
Yeah.
And I would completely agree with you, and avoid, and both sides need to avoid unnecessary provocations of the other. And I think that's possible. There will continue to be this increasingly technologically oriented competition in the global landscape, including economics, geopolitical, etc. But I think that can be managed in a professional and competitive and transparent way.
Okay, all right, thanks. I would like to move on to more finance oriented issues. As you are the expert on this field. Now, Fed's next FOMC meeting is about a month away, right? 13th, 14th of December. Now, with the better than expected inflation number that the market was delighted with about a week or two ago, now, what would you expect the Fed to meet next month to talk about rate hike? All the expectation outside in the market that a little bit slowed down of the pace of the rate hike pushed by Fed this time around. How do you see that? Is that a big step more likely than a giant step this time?
Well, Kwong-Woo, I do think we were all encouraged by the recent inflation numbers, which have signaled that perhaps some of the pressures are beginning to ease. However, I would underscore that it's only 1 month, and that we have to be very vigilant to avoid a premature easing of monetary policy. I do expect, unless there are some untoward numbers that emerge in the next few weeks, I would expect that it does provide scope for a big step instead of a giant step. And I would be very surprised if their move is not 50 basis points in December rather than 75, which I think would shock the markets and would also perhaps restore an unwanted degree of volatility to global markets if there were a 75 basis point move. Many countries have been going through this period of pressure on exchange rates as a result of the strong dollar. But I think it's important for all of us, including our friends in the marketplace, Kwang-Woo, to remind ourselves that a premature easing could be a risky proposition. If you think back to recent history, my dear friend, sadly, who passed away a few years ago, Paul Volcker, launched a very strong attack on inflation in the fall of 1979. But in the latter part of 1980 and in 1981, he eased up and inflation came roaring back. And this bit of history is not often recalled, but it's important to recall because even such a remarkable central banker and global leader as was Paul Volcker, perhaps eased a bit prematurely. And then he had to really hit inflation with a bigger hammer in the fall of 81 and in early 1982. And that's when the US and the world went into a recession. So I know that our friends at the Federal Reserve are very conscious of this risk. And for that reason, I think we have to continue to be prepared for further interest rate increases as we move into the first half of 2023.
Okay, that's great. I would underline your point on this. We should remain vigilant about our monetary and fiscal policies in this very difficult to predict inflation environment, because most recent encouraging news is just 1 month thing. We should not overreact to this short-term development. If we do, then obviously we are creating a very volatile and more potentially dangerous market environment down the road. So I think that point should be taken very seriously by all the market players and as well as policymakers.
I completely agree, and I would just add that, if I may, Kwang-Woo, that inflationary forces are now operating in the labor markets. And so we have to be very conscious that our labor markets now are putting upward pressure on prices. And I think this is one of the reasons why inflation still may be rather stubborn, even though the numbers may begin to subside. If the objective is to restore inflation, to restore price stability, which we would define as inflation in the range of 2%, then that's going to take some considerable persistence, and it will take a pretty firm approach by the Fed to achieve this.
Yeah, as you said, we should not forget that this inflation will be rather stubborn. So we have to keep in mind in dealing with the market in this
I'm afraid
situation. So. Yeah. Now, continuing with our financial sort of issues, now one of the most recent news that shocked the market has been from crypto side. FTX, that's the third largest crypto exchange in the world, now collapsed, literally collapsed. And what sort of impact this would have, not just on crypto markets or sort of DeFi, decentralized finance field, but also broader financial market environment?
Well, I think this collapse has clearly shaken the foundations of the cryptocurrency market. And it will require, in my view, investors, market participants, and regulators to think again long and hard about the nature of this market. Is it really based on underlying fundamental value or not. I think that the regulators have been trying to get their hands around the cryptocurrency market for some time now, and it's been a challenge for them to do so. They are developing a framework, and I think they will need to move forward with a framework which assures that there is an underlying fundamental value to these cryptocurrencies, because right now the market is severely damaged for this, and in my view, it's a lesson in financial engineering that our technology may enable us, in my view, to make big advances, and ultimately, I think there will be the development of a solid, safe, and reliable cryptocurrency market, but not until it is more fundamentally based and more soundly based, and not until it is well regulated and completely transparent. We're not there yet, and I think this is a reminder that innovation in financial markets is very necessary, but at times it can get ahead of fundamental requirements of risk management and regulation, and that's what's happened in this case, and it's extremely unfortunate, but to a certain extent, I think it's going to teach us all some lessons.
Right. Yes. Okay, Charles, so you made a very important point towards the end, because we must encourage innovation in finance to be better support for consumers and investors as well, in industry development also, but always we need to keep in mind that this new innovation carries some potentially important systemic risk, which we have to be properly manage and, if needed, regulate for the sake of stability of our system.
Absolutely.
That's a very important point, Charles. Appreciate that. How about then this broader impact of this FTX collapse, that is on sort of a blockchain-based digital finance, or more broadly, like recent trend has been digital platform finance compared to the traditional sort of a banking sort of business. Now, this big trend would be affected by this FTX trend, the collapse, or is just from this may have a better basis or stronger infrastructure for more sound development of decentralized finance. So how is that?
It's a very good question, and I think it remains a little bit unclear until the dust more clearly settles on this collapse. However, there are some fundamental factors fundamental forces, Kwang-woo, driving the digitalization of finance, and including around the blockchain model, and I don't see those being severely disrupted. I think we are moving into an increasingly digitalized world in finance, and I think those trends are going to continue in those countries like Korea, which are ahead of the pack in digitalizing their financial system. I think will benefit, but it will be important that it become transparent, that it convey in it a sense of reliability in the digital world, and that it be properly regulated. And I think these are key requirements for digital finance to continue to progress. But I think it will, and I think the trends are there, and I think it will lead us all in the direction of a more efficient economic structure.
Okay, all right, thank you. Now, I would like to move to now more macro story, global economy, and perhaps by major countries like US, China, and other economic group. So starting with the global picture. Now, we talked about interest rate environment a short while ago, and that is affected by inflation numbers. But overall, this interest rate trajectory clearly will have impact on real sector, real economy with certain time lag. So most people feel that a recession will be difficult to avoid through perhaps next year. Now, most recent IMF World Bank estimates projections also suggest that global growth will be down, lower than previously thought. So by and large, do you feel such sort of grim outlook or not? So I would like to have your perspective on this economic picture.
Thank you, Kwang-Woo. I do think you're exactly right. We need to not just think about the financial dimensions of this world, but what the underlying economic outlook will bring us. And to be honest, I do believe that the weaker outlook is warranted. We do our own forecast at Partners Group, and we see a high probability of a recession in Europe, and a lesser, but nevertheless still meaningful risk of a recession in the United States. The energy markets almost alone are enough, unfortunately, in my view, to put Europe at least into a mild recession next year. And as you know, inflation in Europe is even worse than it is in the United States today, and particularly in some of the smaller countries where the Baltics are dealing with inflation, which is pushing upwards of 15%. In order to stabilize the European economy in this environment, I'm afraid it will be unavoidable that there becomes a recession. In the United States, I think is a real serious risk of this because, as we talked about earlier, inflation can be a bit stubborn. And I think the Federal Reserve will have to ensure that it has re-anchored inflationary expectations before it can engage in a fundamental easing of monetary policy. It's one thing to adjust your interest rate increases from 75 to 50 or eventually even less, but it's another thing to shift into an easing mode. And I think given the pressures on the world economy now, still some supply chain issues, the ripple effect of the energy markets on global commodity markets, that the likelihood is quite high that we will either be in a recession in the United States or very mediocre growth next year. I think the bigger challenge that we face, if I may say so, Kwang-Woo, is not just what happens next year, but are we on a path for stagflation? And this is a grave risk, in my view, that we're moving into a period of stagnant growth with continued inflationary pressures. And I think the risk of that is not insignificant. We have become too accustomed in financial markets to high levels of debt, and we have become perhaps too accustomed to this abnormal environment of extremely low, even negative interest rates. And as we adjust financial market conditions to a more fundamental set of realities that are based on fundamental values, I think that the risk of stagflation over the next few years is significant.
Okay. All right. This tough challenge for policymakers as well as investors, because the stagflation risk presents a dilemma for policymakers to kill two birds with one stone. So it's a difficult time ahead. We should be all prepared. When you said this, stagflation, or it sounded a bit like something that Larry Summers has been saying, secular stagnation may be difficult to avoid. But at the same time, lately, I gather from Michael Spence, the Nobel laureate, who is also honorary chairman of this institute. Yeah. Another one is Robert Merton. As a good friend of mine for decades. He is also honorary chairman for us. We have two Nobel laureates serving as our honorary chairman. But he seemed to be saying that not just a secular stagnation, but we may be entering, sounds a bit like what you said, secular inflation. So this inflation will be rather stubborn given this environment. And also energy transition will cost quite a bit. It's not, cannot be done overnight to renewables without much cost associated with that. So all things considered, that may be tough environment we are heading into.
Well, Kwang-woo, I think there is some validity in both of those thoughts from Michael Spence and from Larry Summers. Of course, when they use the term secular and when I use it, I think of a period of at least 5 years. That's the way I have always thought about secular trends in economics and finance. And it's really a bit hard to say, isn't it, at this stage, sitting here, whether we're embarking on a trend that may last that long. But I do think that if you look at the fact that apart from the conjunctural issues of today that the global economy faces, the inflationary pressures, extremely high energy markets, emerging from COVID, and the weakness in the Chinese economy. Apart from all of that, we are in a phase of deglobalization, in my view, which may very well feed into either this period of stagflation or persistent, maybe I should use the term persistent instead of secular inflation. I see that we are not only looking, and in our business at Partners Group, we have many portfolio companies which we own, and we are a very global investor. But we look not only at the firms we own, but also their competitors, and we see many firms that are looking at the necessity and the potential benefits of what's called nearshoring or onshoring or friendshoring, which I think altogether add up, unfortunately, even though I understand the necessity of some of these trends from a geopolitical perspective. Unfortunately, if you combine the effects of this, we're moving into an era potentially of a less efficient, less cost-effective world economy, because we are going to be looking for products which are probably not quite the same quality, or perhaps they are the same quality, but they're more expensive. And I think that the inevitable consequence of that is some sustained inflationary pressures. How long that persists, or whether it's simply a phase of a 2 to 3 year adjustment in global supply chains, is not clear. But we also have learned, I think, from this consequences of the economic sanctions on Russia, how consequential economic sanctions can be for the global economy, not just for the country that's targeted. Certainly these sanctions have damaged the Russian economy, and that's the purpose, to try to change the behavior of Russia. But the boomerang effect on the global economy has been quite substantial. As we see the US now applying restrictions on various types of technology transfer from US firms to China, we're beginning to see a glimpse of what sanctions toward China can look like. And I'm not sitting here and forecasting a wave of sanctions on China, but I am suggesting to us that these geopolitical security-related measures, which we're seeing around the world, will have their economic consequences. And it's for that reason that I think that the probabilities of stagflation or persistent inflation cannot be dismissed at all right now. And I think central bankers need to focus on this. You mentioned another factor here, which I think is real. A friend of mine, Anthony Rowley, who's a journalist based in Tokyo, has just written a book. I think he calls it the $100 trillion question. Who's going to pay for the energy transition? Well, it's a huge question, right? Because now we're seeing a lot of debate in the media and in environmental fora about who really covers the cost of this. My own firm does a lot of investing in renewable energy, wind farms, solar, water treatment, you name it. And we are very conscious of the cost issues associated with these investments. We are embarked on a major strategic move to transform energy markets away from carbon bases. And the result of that will be, for at least a significant period of time, will be to increase the cost of energy. It seems to me this is somewhat inevitable. So all of these factors together, I think we're looking at some challenging times on the stagflation or inflation front.
That's a great point. I like your description of persistent inflation rather than secular or
well,
sort of,
it's just a term, but maybe it's a good term.
Yeah, but it seems like the cost of persistent inflation is something that we may have to be ready to accept or digest as we move from the economy focusing on efficiency to economy focusing on more resilience. Then we have to deal with this very stubborn inflation.
Well, and firms and governments will have to adapt along the way. I see Korean businesses relocating investment from China to Vietnam to Thailand to Malaysia. I see Japanese firms. I see American firms, European firms, all of them making their adjustments, some of which may be cost effective, but some of which may, however, lead to further inefficiencies in the global supply chain.
And one important question you raised that should be dealt with amongst ourselves, the global community, that is that who should bear the cost of energy transition? This, for the future of humanity, we all have to be ready to put our resources to support changes to a low carbon economy. I think COP27 didn't resolve this as expected, but I think this effort should be there, and appreciate a company like yours and other major players, alternative investment side, to more and more look into this renewable side from this conventional fossil fuel energy production.
Well, we see great opportunities for firms like ours in investing in renewables because we believe that it's imperative to move in this period of transition. Of course, we have to be very conscious that we have to have carbon-based in the near term to drive our economy still, in part. But so we cannot completely disconnect ourselves, unfortunately, from that carbon world. But we can ensure that we're on a steady transition here. But I also think there's scope for greater conservation. You know, during my travels in Europe recently, I've seen a renewed spirit of conservation of energy in Europe. I don't see much of that in the U.S. today, and I think it's a mistake. I think that you know, I remember when the oil price shock hit the world in 1973 and 1974, Kwangwoo, and we moved into a period of energy conservation in the United States. We reduced the speeding limits on all the highways from 65 and 70 to 55, and we took more important longer-term measures to try to improve energy efficiency and conservation. You know, in the face of this tragic war, which Russia has launched, it should not be too much to ask Americans and other citizens around the world to also embrace a new spirit of conservation, in my view.
That's good. And also, you should not forget that from very long-term perspective, sustainable growth doesn't necessarily mean slower growth. I think that's a good expression to remember when we look at this environmental issues and all those social issues as well.
No, it doesn't.
From long-term.
It doesn't. The scope, you know, as we look at new technologies coming on stream, as we look at the scope for the accelerated application of scientific research in the field of energy, including gas, where you have an explosion of new ideas, some of which are becoming increasingly commercially viable, about converting liquefied natural gas to hydrogen, for example. These developments, in my view, hold considerable promise for a world that can still realize substantial growth, but on a much more sustainable basis.
All right, thanks. Before I move on to a very important country, aside from US, China, just a quick question about how sustainable the recent strong US dollar trend will continue, even though very lately, especially with this a CPI number, rather encouraging CPI number came out. The dollar index has come down a bit, but it's way above the level we have seen up to last year or so. Now, what is your thought on this so-called king dollar or super strong dollars trend?
You know, a strong dollar not only can contribute to difficulties around the world outside the US, but it can become a very mixed blessing for the US. I've never particularly, you know, I spent some years at the Treasury where one of my primary responsibilities was trying to manage our exchange rate policy and decide whether we should intervene in the markets. I was heavily involved in developing and implementing the Plaza Accord, the Louvre Accord. And I believe that a strong dollar is in many ways a misnomer, because it can be a real burden, not just on the rest of the world, and right now it is, by we're exporting some of our inflationary pressures, is what we're doing, but it also will eventually adversely impact US manufacturers who are going to find it more difficult to export their products overseas. And US companies who have strong earnings from abroad will find that the value, the dollar value of those earnings also is somewhat mitigated. I believe that if we see that the Federal Reserve has to continue for a period of time to raise rates, that the more recent easing of pressures on the dollar and the consequent easing of downward pressures on currencies like the Korean won and the yen, we have to realize that there's a risk that those pressures could return. And in that kind of a world, I would encourage more cooperation and collaboration among the central banks and among the G7 treasuries of the world, not necessarily to formalize another attempt at a Plaza Accord, but I think to consider how they can work together a bit more constructively to manage the global system and framework for exchange rates. Because if we resume the upward trend of the dollar, it will spread its virus around the world, I'm afraid, and you know, emerging markets are vulnerable still, not just the sovereigns, but the corporates, in light of heavy dollar-based borrowing. This is beyond the direct macro effects into the sovereign debt field. But I think it's something that the US has to take increasingly seriously as they pursue their monetary goals.
Okay, well, thanks, Charles, on that point. Now, China. Perhaps the biggest question amongst the international investors and also government officials in major countries dealing with much business with China is the question about what would the Chinese economy look like under this President Xi Jinping's third term in office. Now some are concerned that sort of competitiveness of Chinese economy may become weaker with this new leadership in the Communist Party. They don't seem very pro-market or pro-innovation type of people. Whereas some others may contend that this new third-term environment, they must understand the structural impediments or the challenges they face in China, so they will become more realistic to overcome these challenges. Otherwise, this U.S.-China sort of tensions or leadership battle may be difficult to lead on the part of China. So there are different views, but clearly there is concern about the future of Chinese economy. So recently we have seen so-called China run, money coming out of China, relocate them elsewhere. So broadly now, what do you see? This is China 5 years from now on, under this third term, of Mr. Xi's strong control of the system.
Well, I wish, this is where I think, I guess we all wish we had a crystal ball, because I think it's true, of course, on the one hand, that there are reasons to be concerned about the outlook for the Chinese economy. Some of those are purely commercial from a global point of view. You have this attitude which has spread somewhat in US industry in terms of how to globalize their production chain. And you have this so-called ABC attitude, which you've heard anywhere but China, because many US business executives have had a disappointing experience in China. So this is strictly on a commercial basis. And when you add to that the potential for spillover of security tensions between the two countries affecting foreign investments in China, such as some of our major tech companies have built many new generation technological products in China, and will those be feasible in the future? Those are raising important questions. And yes, it's true that the initial lineup of the new leadership of the Communist Party does not clearly signal the kind of commitments to economic reform that one might hope. And then you add to that the conjunctural problems of the real estate sector, COVID-zero policies, and you see a lot of clouds on the horizon for the Chinese economy. However, I would not jump to the conclusion that we can count out a dynamic Chinese policy, a dynamic Chinese economy that does find its own way to adapt to this new world. Certainly, there are longer-term demographic challenges. You see this all around the world today. You have those in Korea, you have them in Japan, you have them in China. China's are more serious, perhaps, because the availability of inexpensive Chinese labor has been so central to the Chinese growth model. Whereas in Korea and Japan, it's been much less so because of the advanced stage of these economies. These issues clearly pose longer-term challenges for China, but I am not ready to write off the potential of the Chinese economy finding its way through this period. And also, I think it's prudent for all of us to allow the new leadership in China to settle in and to see what its policies really are. You know, we've worked, you and I and many others have worked with many capable Chinese technocrats over the years. We know that there is no shortage of technocratic intellectual leadership in the government. The question is, will it be consistent with the overall thrust of the politics? And we just don't know the answer to that. And some of that may be again caught up in the greater geopolitical challenges we face, right? So next year, yes, I think it's fair to expect a weaker Chinese economy. I think the IMF has forecast something around 4%. I wouldn't even be surprised to see it a little less than that. I also think that there are some crucial questions about Chinese technological dependency on Western intellectual property. And we will find out a lot of answers in that space in the next 2 to 3 years. Will the US constraints on transfer of IP to China begin to really bite the Chinese economy, or will it simply adapt? Will other countries join those intellectual property constraints? There's no answer to that question now. So I think we should be a little bit humble and patient when we try to look into the future of the Chinese economy, to be honest with you.
I'm pretty much with you, Charles, on that one. And, you know, clearly stake is too big for us to write off China for the future of our economy and the world as well. Perhaps last question. The time is almost running out.
Is.
Yeah, our last question, last but not least, important. That is that your advice or suggestions to Korean authorities, how best we should deal with this challenging environment. You said something in the beginning of your opening statement, but just in a minute or two, may summarize the kind of position we should take.
Well, here. Certainly, but Kwang-gu, let me preface my answer to that question, my own views, by saying that I approach this very humbly, because I don't have the benefit, like you and others do, of living and working every day in the Korean environment. And I am very aware of the risk of coming in for a few days and assuming that I become a superficial expert on the Chinese economy. But I have had the benefit of working here and working closely with Chinese officials, and now with my private equity firm, with many leading financial institutions in Korea for many years. And I think that a few observations I would leave behind. First of all, I think the management of fiscal and monetary policy here in China remains, in my view, very solid and very professional. I don't have particular concerns about the levels of debt, nor the fiscal position. I think Korea comes out of COVID in better shape than many countries. Admittedly, inflation is a concern in the near term, but let's put aside those issues, because I have considerable confidence in the management of fiscal, monetary, and exchange rate policy here in Korea. Looking out, though, more strategically, I think it's crucial that Korea continue to create more space for small and medium-sized enterprise, for startups. It's happening, but there's considerable scope for even more of this. Korea has an especially dynamic, young, educated workforce. And I think that Korea has the opportunity to really create ecosystems for innovation that move into application quite quickly. And this is an important part of transitioning your chaebol, but it also is not just about the chaebol. It's about the startup industry. It's about taking scientific and technological innovation and turning it into application at an earlier stage. To me, Korea has a number of advantages here: high quality research, leading scientific firms, and you have this extremely strong manufacturing base. Korea still doesn't, in my view, have quite the degree of openness and attitude toward foreign investment that I would like to see. Korea has become a much more open country in the decades that I've had the privilege of working with Korean officials. But still, you see some attitudes, you see some policies which are not as open as you would like. Korea can benefit tremendously if the country and its economy is more open. And finally, just one final thought. I would love to see the government reinvigorate the initiatives to turn Seoul more into a financial hub. This has been a goal for many years, and I would love to see it move forward.
Right. Okay, thank you very much. I especially keep the last point, because that has been my desire, aspiration as well. So we'll keep in touch on how best we can sort of work together to push forward, to make Seoul as a very viable international financial hub in the coming years.
Well, I'm glad to hear that, Kwang-woo, and it's really a pleasure to have shared this time with you and to share it with your supporters and the members of this distinguished institute.
Okay, thank you very much for taking the time to be with us today. On behalf of our members and audience, I would like to thank you very much for your exceptional perspectives, insights, which will be tremendous help for us to understand how best we navigate this challenging time. Thank you very much indeed.
Thank you.
Wish you all
pleasure,
the best.
Pleasure to be with you here
right.
at the Institute.
We'll keep in touch.
Thank you.
Okay, thank you.